Whether your business is small, medium, large or extra large, there's a retirement solution for every type of business. oldmutualsuperfund.co.za.
Well, Finance Minister Pravin Gordhan's budget has shown taxpayers will not see increases in tax or VAT, and that makes substantial tax relief possible. We also saw him indicate further tax relief for small businesses with the aim of supporting government objectives of inclusive growth, employment and development. Now, joining us in studio now is Andrew Wellstead, who's Head of Tax at Norton Rose, Rob Stretch, Director of General Tax and Capital Gains Tax at Ernst & Young, and Professor Jackie Aronso, who's Head of the School of Accountancy at Wits University. Jackie, let's start with you. It would seem to me, we haven't had much time to look at this, but broadly in what is a summary, of course, of the huge budget that they put together, there's several areas, and one of them is businesses. So if we're looking at businesses with, in particular, the small business area that I referred to a moment ago, a higher threshold there, tax incentives for employment of young workers, and employees who get assistance in housing loans and things like that. Sounds very general, is it?
Well, it is quite general, you're quite right. I think there's always the speculation from small business as to what is government going to do for us. We all know we need economic growth and we need to provide some stimulus to small business to encourage that growth. And I think it's a very positive move that we are seeing a bit of a shift in the rate. So we're seeing, as we always have, the shift in the tax-free rate tying in with the tax-free threshold for people under the age of 65, so that ties in with the small business rate. But we're also seeing a new rate coming in, the 21%, which pushes out the 28% rate. So small businesses won't get to the 28% tax rate until they get to a much higher level of taxable income.
So this is significant for a small business.
That is positive, yeah. It sends a signal to say that we're thinking of small business, we haven't forgotten about small business, and I think that sends a very, very positive message. And then also the incentive for employment of young workers. I think this has been a hotly debated issue over the last number of years, and it's interesting to see that that is now being put on the table again in the context of a tax incentive, which would indicate something along the lines of perhaps similar to a learnership allowance, that type of thing that we've seen in the past and maybe rolled out for creation of new jobs.
Of course, it remains to be seen if COSATU will allow these things, but yes, if you tax things, you discourage them, and if you reduce the tax on them, you encourage them. So if they mean it about creating jobs and the youth subsidy, well, then that does seem to be a step in the right direction. Yes. Rob, international, the big companies, and Pravin Gordhan, his sharp side, he bared his teeth a moment there. He said, this is unacceptable, and he was referring to those big companies that have found all kinds of ways to avoid tax or evade tax completely because they're global and no particular jurisdiction has sorted it out. That was the one issue. The other was cross-border business from South Africa. He's saying they want to make it easier.
Yeah, David, I think in terms of globally, it's becoming more and more of a focus area at the moment in terms of global companies operating in various territories, but paying very little tax in those territories. You know, not only across Africa, but also across Europe. I think there's some very well-known brands that have been fingered across Europe. Across Africa, there's a number of territories that are looking at. So I think globally, the issues that the revenue authorities are looking at, and I think a lot of them are working together. They're looking at issues like transfer pricing of goods and services across border. They're looking at issues such as thin capitalization in terms of how those businesses capitalize and so on. And then around where the goods are coming from and how they are coming in. You know, a lot of people use so-called treaty shopping, using various territories to move the goods through to try and avoid any of the taxes on those, and also to avoid the withholding taxes. While it's not tax evasion as such, I guess they're saying it's tax avoidance. So on the big picture, they're looking at that. From our point of view in South Africa, there has been a big focus on it. We've seen over the last few years a greater emphasis by the revenue authorities here on transfer pricing into South Africa of products, of goods and services. We've seen the implementation of a dividend withholding tax, the implementation or proposed implementation of your interest withholding tax and your royalty withholding tax, which has now been announced has been extended or delayed until 1st of March. But linked in with that is to bring in a withholding tax on services in terms of cross-border. So there's a significant emphasis on that. And closer to home, around Africa, we have the Africa Tax Administration Forum, ATAF, that are working closely together to try and get some sort of uniformity across Africa in the control of cross-border transactions.
All right, let's pause there. I'm asking each of our panellists just to focus on a particular area that interests them and has dominated that area for them in the budget. We've still got to hear from Andrew Wellstead of Norton Rose, but let's now go to Cape Town, and joining us from there is Derek Ferreira, who is Head of Product Management at Old Mutual. Derek, on the savings and investment side, it looks pretty good. They're talking about tax-preferred savings and investment accounts, tax treatment of pension, provident and RA funds, simplified and harmonised. Sounds good. Does it mean something?
Good afternoon, Dave. Yes, absolutely. I think from a personal individual taxpayer perspective, perhaps one can view this reading of the budget as a positive one, in a sense that there were expectations initially of increasing in tax rate, especially on the higher upper income levels. In fact, to the contrary, we saw an announcement that your tax savings on tax brackets or bracket creeping of some 31% at the bottom of the income tax earnings and some 0.9% on the top. And then the big positive was the clear announcement, as you mentioned, and the intention of finding some harmonization across retirement, provident and pension funds alike. And I think on top of that would be some announcements and indication of where the Minister is going with this. And the first point that came through was to encourage and bring about measurements that will force people to preserve their retirement savings, pension fund benefits upon changing jobs or leaving employ. And I think the biggest dilemma from a personal perspective has been the fact that not many South Africans at this point in time can afford to retire financially independent. And a lot of that, a vast amount of that, one finds comes through people not necessarily preserving their retirement benefits, but rather taking it in cash with tax consequences, etc. So that's definitely a very positive sign from an industry perspective, and I think longer term from the man in the street, and the benefits to be reaped, obviously, in retirement years. Furthermore, he also made a very clear intention of saying that pension fund retirees, trustees have a responsibility to actually educate and ensure that turning the retirement capital into an income stream, there's got to be levels of education and responsibility. And I think the big thing here is about a sustainable income during your years of retirement.
Well, thank you to Derek there in Cape Town, Derek Ferreira, summing up, I think, very well the positive aspects of preservation. Of course, politically, it's also a hot potato where people say, I can't afford not to withdraw my preservation of funds. I can't afford to live without those. So it has been a delicate issue. It'll be interesting to see if he can do it. We'll say goodbye to Derek in Cape Town and come to you, Andrew. It sounds technical. It sounds like something that only big industrial companies should be involved in. This carbon tax, 120 Rand a tonne, but an exemption for a threshold of 60%. I don't know what that means. With allowances for emissions-intensive and trade-exposed industry. Does that mean that all the big offenders can actually get off it? How important is this carbon tax?
I think it's important. It's been controversial since it was first spoken about a couple of years ago. We're in a country where they're trying to develop industry, and there's significant costs on industry of production. You hear about it all the time, and this is perceived as another cost. So the first thing is the carbon tax will be controversial. That said, it's not unexpected. It has been around for a while. People have been talking about it, and we mentioned last week that we expected to see some sort of update on it. This level of detail, probably not.
When you say controversial, are you saying that people don't like it because they're saying it's going to affect our performance? I mean, controversial not in the sense that we want that anyone disagrees with discouraging carbon emissions.
There's two controversial aspects to it. The one is it's another cost of production, and obviously industry doesn't like that. The second thing is a lot of lobbyists are saying, fine, carbon taxes and environmental taxes more generally, we saw there was an increase in the vehicle emissions tax as well. Green taxes, I'll call them that if you like, are necessary, and they're a worldwide phenomenon. You have to learn to live with it. But one of the key criticisms of these taxes is that in our fiscal regime, they go into the big pot. And the idea is if you're going to levy a green tax, it's not only for the benefit of the fiscus, it's for the benefit of the planet. So ring fence that revenue and use it for those
but purposes. We've seen with the road levy, I mean, that money, where does that go? It doesn't go onto the roads, that's for sure.
I can say that historically Treasury have liked a centralised approach. All the taxes go to one spot. But from a green tax perspective, it's particularly acute, this controversy around.
I saw you nodding away, Jackie, with the carbon tax. What's your view on
Well, I think that's been the really contentious issue for years, is whether this will be ring-fenced or not. And of course, the view from government is that it won't be ring-fenced, but I share your view that I really do think that in case of carbon taxes, you really have to, because the tax is there not just as another means of raising revenue, it's there to encourage a certain behaviour or to discourage certain antisocial behaviours. So you really need to ring fence it to protect that type of thing that you're trying to incentivise.
Well, we're going to pause on that. I'm still not clear whether trade-exposed and emission-intensive industries can get exemptions. Then what's the point? But we'll come back to this issue. We're heading into a short break. When we return, we cross back to Cape Town and we continue our tax analysis with our panel.